recorded.
Good evening, everyone, and thank you for joining Q4 FY23 earnings call of InfoBeans Technologies Limited. For the introduction, I'll hand over the call to Surbhi. Over to you, Surbhi.
Thank you, Pratik. Good afternoon, ladies and gentlemen. Welcome everyone, and thanks for joining this Q4 and whole year earnings call of InfoBeans Technologies Limited. I request all the participants to please mute their mic. The results and investor update have been updated on our website, and it is also available on the stock exchange. In case anyone does not have access of the same, please do write to us. We'll be happy to send it over to you. To take us through the results of this quarter and answer your questions, we have today with us our co-founder, Mr. Avinash Sethi. We'll be starting the call with a brief overview of the company's performance, and then we will follow with a Q&A session. Kindly ask your questions by raising hand after the brief overview by Avinash is over, and then we will address all the questions one by one. I would like to remind you all that everything said on this call that reflects any outlook for the future, which can be construed as a forward-looking statement, must be viewed in conjunction with uncertainties and risks that we face. These uncertainties and risks are included but not limited to what we have mentioned in the prospectus filed with the SEBI and subsequent annual reports, which you will find on our website. With that side note, I turn over the call to Mr. Avinash Sethi. Over to you, Avinash.
Thank you, Surbhi, and thank you, Pratik. Thank you for all the ladies and gentlemen for joining this call. We are now presenting the final numbers for this year. Before we jump into it, just a quick brief overview for people who are attending for the first time. InfoBeans is a company founded in 2000 in Indore, and we have now offices across the world in US, Europe, Middle East, and India. In India, we have 4 offices: Indore, Pune, Chennai, and Vadodara. And we are a publicly listed company. Now more than 1,450 members in the company, focused on digital transformation and product engineering as a core offering. We have been blessed with the partnership from Salesforce, ServiceNow, Microsoft, UiPath, and Automatic. These are some of the leading software companies in the world, and we've been able to benefit from our partnership with these companies year after year. This is a quick journey, a chart of how we have grown over the years. 2000 started in Indore, 2004 opened in Pune, then in the US. And some key points that I would like to mention is in 2007 our revenue was 4 crores. In 2015 it became 43, and in 23 we are about to close at 399 crores, which is almost 400 crores. So 10x journey between 2007 to 2015, and 10x again in 2015 to 23. So 8 years we have been able to deliver 10x kind of a growth, and we continue to focus on that kind of a momentum for the next 8 years also. We went public in 2017, and we have our first acquisition done in 2019, second in 2021, and we also got listed on BSE last year. So this is a quick snapshot. Look at the numbers. So the first 13 years were first 10 years are more fundamental and foundational. The next 13 years have started for an active growth, which is what I talked about, a 10x kind of a growth. We work with less number of customers, but want to expand into those accounts to a much larger value, repeatedly year over year. And we'll see some data points in the coming slides. We focus on those 74 customers where we invoice more than 1 crore a year. Out of them, 13 are customers which are $1 million businesses. And we have much larger set of clients, which are Fortune 500 clients, $1 billion businesses, and unicorns also in our kitty. This year we closed at 399 crores, 85 crores of EBITDA, 36 crores of PAT, about 176 crore cash and cash equivalent, which includes account receivables. And we delivered a 38% growth from last year. We've been growing at 42% CAGR since inception. Multiple partnerships and awards. One of the best awards that we really appreciate is about top 10 best companies to work in India for women. which has been recently awarded to us. These are the services that we offer to our customers, mostly around cloud and mobile technologies. We focus on Salesforce, ServiceNow kind of platforms, user interaction, user experience. Blockchain is a new kid on the block. We are building this practice, and we also have a paid client for this practice. RPA is quite an expert, capability that we carry, which is particularly on CI/CD, DevOps, and so on. The founding team, please note that we had Mr. Santosh Muchal retired by rotation, and we have now replaced with Mayuri Mukherjee. She is a IIM Ahmedabad graduate, and she's been working with, she has a working experience of 20 years, worked with Nestle kind of MNCs. She's based out of US, and she has recently joined as independent director on our board. The very popular, very strong core team, founders of Eternus and founder of Philosophy that we acquired. So 3 founders here. Dennis has recently joined us to manage the design and innovation practice in the US. All of these people have been within InfoBeans for quite some time. They are the backbone of the leadership, and they've been contributing to the growth of business successfully. Darshana joined recently. She's handling blockchain. All of these people are, long timers in InfoBeans, and they've been leaders at the forefront of the growth momentum that we witnessed. So here is the quarterly number for January to March quarter 23. And if you attended past calls, I have always told that this quarter is going to be suppressed because of one-time incentives that we offer to our team, which is to the tune of about 6 crores. And we also had certain provisions for bad debts in this quarter, which accounted for about 2.2 crores. So 8 crores have been lost because of these 2 one-time activities, I assume. And therefore, the PAT and EBITDA numbers have significantly dropped from previous quarter or previous year numbers. By the way, the previous year numbers were, unsustainable, and again, that has been a repeated commentary from our end that high amount of EBITDA margins and PAT margins are not sustainable. We have a steady state margin, which we'll talk about again later. But this is where we are. We are happy that we are able to hit that kind of a revenue number, and EBITDA is still in a controlled situation. We should be able to recover from this one time, from coming quarters. This is a yearly number, and if you look at it, we have grown 38% on the revenue side, 289 crores in last March 22 versus 399 crores in March of 23, and that's a significant growth. By the way, there's another column. If I were to look at March 21 number, it was 196, and we have doubled ourselves from 196 to 399 in just 2 years. That's an active strategy we followed. We consciously chose to focus on increasing our revenue, particularly in the demand time, the high demand time of COVID, post-COVID scenario. And that scenario is no more existent now. But we certainly chose an active strategy and benefited from it. We also had to pay a cost to it, but we are sure that we will be able to recover all of that cost in time to come. But revenue is something that stays with us long enough. And I'll tell you another slide where we talk about how we have been able to retain our customers year over year and grow into those accounts year over year. So the strategy of capturing the client and capturing the revenue has really worked very, very favorably for us. So another interesting point here that I wanted to highlight is cash flow from operations has kind of remained the same, 81 crores last year versus 77 crores, because the EBITDA component has a lot of depreciation towards the intangible assets created because of our acquisitions of both Philosophy and Eternus. So the cash is, gathering or collecting in the business, but the balance sheet has a different story to tell. However, since we have, increasing our cash reserves, we are, in a strong position to look at another acquisition in time to come. So some of the key performance indicators, if you look at the last 5-year data, a CAGR of 35% year over year for last 4 years, FY23. EBITDA margins have jumped up in 21-22 just because of the COVID scenario, but we'll come back to steady state margins of 24%. PAT shows the same graph. Here, I wanted to highlight a very interesting point. Let me see how I can get the vanishing mouse. Okay, I can try that. So if you look at this, as I said, our strategy was to increase our revenue. And, since the talent cost was very, very high, we took that chance, and therefore there is a depression in profit margins. So this is an active, outcome. It was a known outcome of the strategy that we followed. Therefore, it doesn't come as a surprise to us. The last 10-year growth metrics, in terms of the cash reserves, in terms of the net worth, there is a 16x growth here. There is a 13x growth in terms of net worth. Revenue numbers have grown significantly. Look at the CAGR, revenue, EBITDA, and PAT. They are also all growing at a healthy pace. So the key clients, I will not dwell much on this. You can download the presentation from the website after the call. Here is a data point that I must highlight. In last 1 year, we have onboarded 3 Fortune 500 customers and 6 enterprise clients, which has a revenue of more than $1 billion for themselves. And this again goes back to our focus on entering into large accounts so that we can generate repeat business from each one of them year over year. And if you look at the share of revenue from existing clients, we've been doing repeat business from our customers at a 90% year over year. So once a client comes in onboarded, and then we continue to expand into those accounts successfully. So here is that chart which I was referring to. Look at the kind of growth that we have into each of these accounts. 250% growth in one single year, 136% growth here, 126% growth here, 70% growth here. So these accounts have been successfully grown year over year. These are the accounts which remains with us over like a 10-year period. And they have dropped, they have remained flat. This has dropped because the project got over. But essentially, if you look at out of the top 10 clients, we have grown in 8 of them. The top 10 clients gives us 51% of the revenue. And the average age of this top 10 client is more than 7 years. Despite having some of them, which are like 1 or 2 year old clients, we still have been able to have a much larger relationship carried over year. This is the revenue breakup by segment, by business, and by geography. 50-50 more or less in digital transformation and product engineering. 81% from InfoBeans and 19% from cloud tech, which is what a lot of investors keep asking. 70% from the US market. India and APAC region has grown up very well for us, 16%. 8% from Europe and 6% from the Middle East. All the markets are growing for us, so which is quite a significant thing. Acquisition remains an active strategy for us for growth. And in the last 6 years since IPO, we have done 2 acquisitions. And the market is now ripe for another one, where we have the focus area for us is either on the 4 practice areas that we are in, like ServiceNow, Salesforce, UiPath, or design, maybe blockchain also, add new competencies, which is blockchain, go into verticals like BFSI, or expand into geographical presence like US and Europe. The sweet spot is 10 to 15 million in revenue. Here is the current pipeline, and as I mentioned, the time seems right because the valuations have come down from what it was just 6 months ago. So the peak valuations are, coming down as other valuations of the IT businesses. So I think it is now coming into our sweet spot where we don't want to overpay for a business because the ROI doesn't justify that. So our wait for last 1.5 years has now seemingly right for a next acquisition in next 6 to 12 months. There are 3 companies they're looking at. One is a ServiceNow company based out of Europe. The second one is a user experience company. It is at low revenue. It is below our radar. But since it is an expert business with a much higher EBITDA margin, we are willing to look into it. There's another management consulting company which goes up the value chain for us. So this is another possibility that we are looking at. And let me also clarify here: we're just talking at a founder level right now. There is no definitive agreement that we have signed with them in form of a letter of intent or term sheet or anything. So we are just discussing with them, but we find that these are some 3 attractive options for us. We talked about the financials summary. I think the same numbers are here in more detail. I'll quickly skip that. We go to the yearly number. Here I think I have something to talk about. When I look at the revenue number, we have grown at 38%. There's an increased team cost at a yearly level, which we talked about in the previous quarters. There's a one-time incentive of 6 crores. There's a provision of bad debts for 6.2 crores. Our targeted EBITDA normally is 24%. We are at 21 right now. So the pendulum has swung in the both the directions. We have seen very high EBITDA margins of 28 and 29% over last 2 years, and that was the swing on the positive side. Now we are seeing the swing on the negative side, but I think we'll be able to settle down at 24% in a shorter period. And then same goes with PAT margins. We will be able to recover that quickly. As I said, there is a one-time impact of these 2 big items. Plus, this continues to be a challenge for us, which is increased high cost. Tax rate has also increased over the years, which you would have witnessed, because we are getting a lot of profits from ICL, InfoBeans Cloud Tech Limited, which is at a very healthy 30% EBITDA margins, and therefore we pay significant tax there, which is a non-ACG unit. So we have a higher tax incidence. So this time we introduced this margin movement because we see a lot of questions coming in the Q&A session. To try to preempt it, the team expense has increased by 8%. Our sales and marketing got to increase, which is natural for the business that we are in. The provision for bad debts, which is a new item. We have not been seeing a very high amount of bad debts, but since we have been through our subsidiaries, we have been working with some of the startups. During the tide reversal of zero funding or no funding, there's a lot of stress in that startup segment. We actively focus on reducing startup exposure, and we continue to work towards that goal. But there's some of the ghosts of that arrangement that start to bother us. Other income has also reduced. Operating leverage, we have improved some margins here. Exchange rate has been on the beneficial side, but that would have been set off with the other income reductions. So EBITDA from 29, again, as I said, 29 is not sustainable. It was never sustainable. So we are at 21, but yeah, as I said, 24 is something that we look forward to. Balance sheet, the reclassification between non-current assets to current assets, addition of profits. from the last year. And DSO improvement because we have also provided for bad debts. So some of the long-standing accounts have been cleared off. Equity increase from profits generated last year, and non-current liabilities came down because of the payments to the equity holders of returns. So the events that we are attending for generating a lot of sales and marketing attempts for generating business, meeting clients on blockchain, on emerging technologies, Web3, and design trends. We're also getting awarded, as I said, best top 100 best women companies for women in India. India's Growth Champions year over year for 4 times in a row. Dream companies to work for, we get it every year, and then another one which is Great Place to Work. We've been getting it from 2015, 16 onwards. Some CSR updates. We have been constantly investing into community expansion, and here's a report card of last 3-4 batches that we have conducted successfully, and almost everybody from those 1 year engineering program has got placed. Interestingly, one of the candidates who had joined InfoBeans 2 years ago has now joined Salesforce at a much larger package, 18 lakhs per annum package. He was a BCom graduate. There are 2 others who are notable who have joined at TCS. Most of them have joined smaller companies in Indore and around nearby region. Another support that we do with SD Foundation, which is a foundation supported by Shibulal, co-founder of Infosys and ex-CEO of Infosys. We have been sponsoring 46 students there. 27 have graduated and 9 out of them have got a job, therefore pulling out their family from poverty. We do a similar program at Sant Singaji University that we have been supporting about 25 students there. And then another one in Pune, which is we're trying to support the working women, house help kind of women in Pune, which is in a village called as Mulshi near Pune, where we have supported 40 women to enhance their skill development and be more earning more money from their jobs. So here is the market data, and I think we're done for this presentation. We can open the question and answers. So yes. Back to you, Prateek.
Yes, thank you, Avinash sir. Those who want to ask the question, they can raise their hands and then they can go ahead and ask the question. In the meantime, actually, we already have one question in the chat question box. So Shashank Rastogi is asking, what is your revenue and EBITDA guidance for FY23-24, and are you looking for new acquisition in the current financial year?
Thank you, Shashank. We usually don't give any guidance for revenue and EBITDA, and our attempt is to, obviously grow better, grow higher than what we have been doing. And if you look at the past, we are attempting to grow at a faster pace, and with a combination of organic and inorganic engines, we aim to grow at 25 to 30% year over year. And obviously, not every year is the same, but that is our long-term target that we should be growing at a faster pace. That is the simple answer I can give you. And there is another question to it, right? Acquisition, yeah, we continue to do that. As I said, we have 3 targets that are there in the pipeline, and we like them. We find them in our budget, and we are we are in discussions at a next level. But we want that it's still a discussion. There is no concrete paperwork that we've done in terms of signing a term sheet.
Okay. So we have first question from VP Rajesh. VP, I have unmuted your line, so you can unmute and ask the question.
Thanks for the opportunity. So Avinash, a few questions. On the numbers, if you can talk about what was the organic growth year over year, that will be helpful.
So if I look at organic growth year over year, let me go back to the chart itself. Yeah, so if you look at this number, so 271 versus it will be 300 and I would say 314. Just a look at the revenue from operations. So
right.
271 versus, oh, sorry. Let me retry. So 252 versus 374. Sorry, 314. So if you can do a comparison, 252 versus 314 is the number. So which is roughly 30%, which is about 30% plus growth on an organic basis.
Okay.
But as I said, VP, and I keep telling all the time, we don't really look at business like that. Because when we work together, there are a lot of synergies that we start to generate for each other. For example, Eternal has been able to sell in our clients their services, and that has increased their revenue significantly, almost by 20%. So,
right.
So it is difficult to, because now we are working in an integrated manner. We don't look at business like you would like to think. It's not very simple math that I can just remove the numbers and be able to figure it out. But it is a combined synergy that has led us to this kind of a growth.
Understood. My second question was your number of unicorn clients dropped by 1. So any comment on that? It was wonderful to see that you're getting a lot of Fortune 500 clients last year, but I was just curious about the drop in the numbers of unicorn clients.
All the unicorns are facing a lot of trouble, and I think we read it every day in the newspapers, right? From layoffs to funding getting dried, to their investors are asking for increase in interest rate coupons, and they're now searching for debt. All kinds of challenges in their businesses, which is obviously they will want to reduce their expenses dramatically. So we are suffering from that, but that's okay. That's part of the business.
Understood. And last question was this 6.2 crores of bad debt. If you can give more color in terms of how old these accounts were, and whether it was 1 or 2 accounts versus more granular across a number of accounts. I think some commentary will be helpful to understand.
So there are
4
to 5 accounts, and they have been delaying their payments, and I think the overdue was more than 180 days. So we made a provision. We are still chasing them. We are still behind them, but from an accounting governance point of view, we have just changed it up as part of the provisioning of metrics. So some of them are startups, and the funding got right. A couple of them were expected funding, and it didn't happen for them. Some of them they just lost the entire business. So these are as I said, these are companies from the acquired entities, and we have an active strategy which we don't want to work with startups. But then since we have this coming in as a part of legacy, we are just cleaning it up.
Understood. So most of these bad debts were created in this year, right? There was nothing which came over from last financial year. Just wanted to make sure of that.
There are a little bit, I would say about 10% or so from the last year, because let's say the invoice was done in March. We were just waiting for payments, and we realized that it is not going to come, so we had to ultimately take a call and then just make provision for it.
Understood.
Usually we have a practice where 180 days is where we restrict it.
Right. So there were some accounts which were due over 365 days, right? Is that correct or no?
Yeah, because we were very hopeful. They actually made some payments in between, so
I see. Okay.
that's how it is. Yeah.
Got it. And my last question was on Eternus. So if you can just refresh us on the earnout payments, where we are on that, how did it work out for them this year?
So they have achieved 100% targets for this year, and therefore they will be paid 100% achievement money, earnout money, so which is going to be 16.25 crores. Plus, they were able to recover some bad debts and some bank guarantees they were able to clean up, which is their surplus cash, so we'll pay that as well, which is about 1 crore.
Wonderful. Thank you, and all the best, Avinash.
Yeah.
If I have more questions, I'll get back to you.
Thank you, VP.
Sure. Thank you very much, VP.
So the next question is from Faisal Hawa. Faisal, I have unmuted your line. You can ask your question.
So are we system integrators for ServiceNow and for Salesforce, and so similar business which many decades ago that Infosys used to do for SAP, and that was their mainstay. So is that like our go-to market, where we start out with these implementations and then you go deep into the organization?
Yes, Faisal, that is one of the common strategies that almost all the IT services companies follow. We have chosen to stay with the players like ServiceNow and Salesforce, because that allows us entry into large enterprises. And therefore, we've been able to get these large names. We are still a micro company if you look at it in the whole IT universe of India or maybe the world. And despite having that, we have very, very large Fortune 500 customers with our clients. It is because of the virtue of these large application softwares, platforms like Salesforce and ServiceNow. So yes, that has worked fairly well for us. We start with implementation or integration within their existing systems, and we've been able to expand into those accounts for other services, digital transformation and services that we have.
So, I mean, what is the story of how you have founded this company, and who are the key other members, and what has been your driving force to get to where you are, and to really be an entrepreneur and go into.
We'll have to do a separate call for that. There are so many people waiting in the line, so we'll have to take that separately. But I'm happy that you have the curiosity to figure out how this company started. We are we have done 23 years so far. There is a roadmap that I shared, which is a very highly abstracted version of the story. But let's connect later. And as I said, it is going to be at least 1 hour call.
Can you just tell me? Can you just say something about how? So can you just tell me how our structure is? And I mean, how many hands do we have in Europe and in US? For hardcore sales, and how they really do the mining, and what are they?
So we have, if you look at the people chart here, I think it is mentioned.
Yes, I saw that.
Yeah. So if you look at, let's say Sarulata is managing sales and marketing from India for the US market. Ram is handling client success, which is the account management, particularly in the US market. Then we have Gitanjali, she is handling sales in the UAE market. Then we have Emerson handling sales in the US, along with the founders, Mitesh in the US market. Siddharth does a lot of sales in Germany and the Middle East area and India. Jitendra and Shreyas again sales into Indian market. So yeah, this is where we have the details. But there are more members in the US market. We have at least 4 to 5 salespeople in the US market. We have 4 salespeople in Germany market. We have 2 in the Middle East, and we have at least a couple in India. India is not our focus anyway, but it is growing naturally for us, and we are able to get our rates. So we continue to grow in India naturally.
So in a previous slide, you gave some orders that you have bagged. So and in that you have said that 18 to 20 million revenue. So is that the total pie that you have, or is that the value of the order to be executed over many years?
No. So you got it wrong. This 18 to 20 was
this one, yes.
A target company that we are looking at for acquisition.
Okay.
So this is an M&A pipeline. This is not a sales pipeline.
So these are all implementers that you're looking at. ServiceNow implementer, then consulting company. Okay.
Yeah.
Okay. So these would be available at what, 1-time sales or 1.5-time sales?
That's a difficult question to answer right now. Actually, more than what you're saying. Much
Thanks,
more.
Okay. That answers all the questions. Thank you.
Yeah, Faisal, I would like to ask you to come in the queue. There are other participants as well. So I would request you to come in the queue. Thank you, Faisal. We have next question from Rajesh. So Rajesh, you can unmute yourself, and I would request participants to limit their question to 2 so everyone can ask their questions. Thanks.
Yeah, good evening. I just wanted to check on the bad debts, provision for bad debts. Is it 2.2 crores or 6.2 crores?
No, it's 2.2 for the quarter and 6 for the year.
6 for the complete year. Okay, and
yes.
And you have also mentioned that you have been growing at 36% CAGR in the revenues. So can we, is it safe to assume that we can grow at 20 to 25% in revenues CAGR for next couple of years and profit of
that is what our target is, Rajesh. That is what we want to do. We want to do better than that. Mm-hmm. But as I said, not everything is in our hands. Our aim and our target is to grow at a faster pace, at least maintain the past pace, if we are, if we can. So we make all the efforts, but the outcome is not in our hands.
Okay, because for the last 4 quarters, if I can see, the revenue is around 90 to 95 crores per quarter. So how do you intend to increase that revenue year on year from here on?
So there are multiple ideas around it, and there's a lot of things that we're working on the ground. One is obviously expanding into existing client base. Mm-hmm. Second is increasing the sales attempts so that we generate more clients. Mm-hmm. Third is enhance our capability set so that we can continue to delight our customers. Fourth is figure out areas where we can create a vertical expertise. So we are currently investing in storage and blockchain to become a subject matter expert, and then we can probably be able to generate more value for our customers moving from there. The next strategy is to acquire companies in the geographies and the capabilities that we operate in, so that it's both build and buy as a strategy for us. So we continue to make attempts, as I said, in all the directions, and at times the market is not favorable, so the numbers remain stagnant. But at times, if you look at the yearly number, we have actually grown at 38%.
That's an excellent number, but the point is, from here on, can we grow at 25 to 30% CAGR?
Nobody knows, Rajesh.
Okay. And do you also work in IoT and artificial intelligence or electric vehicle segments?
No, we don't.
No. Or you don't intend to build the capabilities on that also?
No, so we are, as I said, we are building capability on blockchain. We are also trying to work towards AI. We are training our team on that, but we are far from building a capability that we can sell.
Oh, okay. All the best. I'm all set. Thank you.
Thank you, Rajesh.
Thank you, Rajesh.
So the next question comes from Hetal Sonpal. Hetal, you can unmute your line, ask a question.
Hey, thanks, Avinash, and congrats again for a great quarter. So I have a couple of questions on the number of clients slide. Can you get to that? What I noticed is the number of Unicorn has gone down. Your explanation to Unicorn a minute back was on the same numbers, going down from 7 to 6.
Yeah, that was the for the unicorn number, yeah.
And these unicorns are referring to our India, in India or in general?
No, so we have 4 unicorns in India, 2 or 3 in the US.
Okay. You typically use the term unicorn for a billion-dollar corporation, whether it does not have to be a startup in startup definition parlance, right?
No. So unicorn is a billion-dollar valuation business, and enterprise, which is a greater than $1 billion, is in revenue. They're 2 different things here.
But the other thing was the total number of clients has dipped. And any more updates on why you lost these clients, 7 clients?
So no, so we actively, as I said, reduce our focus on businesses which doesn't give us more than 1 crore every year. So we cut it long tail consciously. That is part of the strategy. We consciously drop out clients which are, startups. We don't want to work with startups just because of these uncertainties. So yeah, we make an active attempt to reduce the count.
Got it. My last was, your strategy to expand into existing clients is great. When you are increasing your business, are you getting more business from their in-house operations, or are you replacing an Indian competitor? In the same light, net, what's the share of wallet in your large customers? Is that a number you are accounting for?
So yes, we have been able to do all of those things. We expanded into internal business units. We have been able to replace competitors, which are most of the times are Indian competitors. And we are still, as I said, a tiny company. Looking at the Fortune 500 companies, our wallet share is not significant at all in their books. In our books, obviously, it is very, very significant, but in their books, we are still non-existent in that sense. But there are companies where we have worked for a very, very long time, 14, 15 years, and each of these, and I'm talking about at least 5 to 6 names where we have more than 10 years of relationship. And these are all mighty big corporations. And each one of them have their captives in India for almost 7-8 years. So despite that, we continue to get business is something that tells us that we are doing good work and we continue to earn their trust and their business year over year. And we are expanding in each one of them. So that way, even though the wallet share is a very, very tiny thing, we're still making a positive impact in their business. Therefore, the business comes to us and not to their captives.
Wonderful. Client testimonials from such clients would be good addition in your quarterly results next time. Thank you.
Yeah,
Thank you.
Sir.
The next question comes from Varun Agarwal. Varun, I have unmuted your line. You can go ahead and ask your question.
Hi, Avinash. Congratulations for the good set of numbers. Am I audible? Yeah.
Yes,
so,
you're audible.
Yes.
The one-offs in the margins and the bottom line numbers are understandable. In terms of top line, when I see the other peers who are smaller and even larger than us, a lot of them have shown decent growth. So any color on the headwinds we are facing in terms of growing in the top line?
See, there is a cautious mindset right now in the clients, particularly in the Western market, where high interest rates and inflation plus the entire balloon, the bubble burst of valuation gain has kind of made people very, very cautious. But that doesn't mean that they have stopped giving business. Some of the unicorns or some of the large companies, they've done a very high amount of layoff, and therefore they've kind of paused the work that has been given to companies like us. Now, so that is a macro factor, but I think what we're seeing is the demand is coming back, and we have a long list of open positions back to us. So I think it is just a roller coaster in my mind where people just remain cautious, and then it's a self-fulfilling prophecy where everybody remains cautious, and then all of a sudden the market starts to slow down. But then I think it will come back, and it is starting to show signs that it is back into action. So I won't worry much about it. It's a short-term temporary thing, but there is no long-term worry that we see here.
No, other than the macro factors compared to our competitors or our peers, we are not seeing more competition or we are losing market share or any such kind of a scenario, no?
The Varun, market competition was there from day one, right? In all the markets that we are operating in, we see competition every day.
Yes.
So there is no, I would say there is no variation in that. I mean, the competition remains.
Because last 3 quarters, if we see, all last 3 quarters, Q on Q, we are continuously seeing degrowth. So that is where I am asking.
Yeah, don't worry about the short term. I would say look at the long term. I just had this chart in front of you. 21 to 23, we have doubled.
Yes.
Right. That's not any less achievement, right? So,
right.
So yes, I understand quarter on quarter there is a challenge, but we will find a way to overcome it. We are actually working towards it, so it will happen.
Sure. One more thing, we brought in Mrs. Mayuri as an independent director. So there, in her profile, I see that she's from the FMCG sector. So any particular reason for choosing her? Because if we bring somebody from our sector, we will get a better mentor, right?
So we continue to do that, and it's a continuous process for scouting for the right people for the advisory board as well as for the independent director board. Not everybody is keen to join the board. They cite a lot of reasons like conflict of interest.
Okay.
So we have a little choice there, but yeah, understood. She is a IIM Ahmedabad pass out, and she has very good experience in cross-border marketing and FMCG sector. So we can borrow some of that marketing knowledge for our markets that we are operating, particularly Europe and US.
Sure, Avinash. Thank you so much.
Thank you
for the coming quarters.
Thanks.
So the next question comes from Varun Gupta. Varun, I am unmuting your line. You can go ahead and ask your question.
So, hi Avinash, congratulations on good set of numbers. I have a couple of questions.
Thank you.
One on the emphasis matter. In the audit report, EY has highlighted one error, like there was some error in the previous financial year financial results, and for that we have done some restatement of the numbers. So the numbers are not material, but what are the controls or what are the steps the management is taking to avoid such instances in the future? Because since it's a listed entity, any error in the audited accounts is not liked by the market.
Absolutely, and we have taken immediate corrective steps. That is how so it was observed in the first quarter by EY of this year. So that has been corrected, and because I mean the reason why we got EY was obviously to improve our corporate governance and compliances, and that is what they found in the first place, and that's how we got corrected. We also have implemented several control features after that, which is where we've been able to make it more strong and robust from where we were. So there is no such material observation after that quarter. So 3 quarters have been passed after that. And now we have annual report, annual audit, a thorough audit done by EY in this quarter. So I think we are on track in terms of making it more robust.
So EY is our group auditor, or EY is doing the audit for only Indian entity? Who is doing the audit for the US entity?
No, EY is our group auditor. Group auditor.
Okay. And Avinash, second question on the salary cost. Even though our top line is not growing, but there is a huge spike in the salary cost. So how much salary cost is increasing on account of new hires, which we did in current year, and what is the value of increment component in the total increase, if you throw light on that?
So in previous quarters, I mentioned that very clearly. We had a 40% jump in salary cost from March 22 to April 23. Sorry, March 23 to April 23. And then, so that was the factor driven by the external demand and the salary that people were getting in the market. So we had to redo and take a much larger hit. Which is what we did in the start of this fiscal year. And so that is one of the largest impact that we've seen. We also hired significantly from, I think we hired 500 to 600 people last year. And we also lost 200 odd people last year. So therefore the costs and the churn was much, much higher. This year we see the attrition rate dropping to, less than 12%. So that impact should be reduced. But the cost continues to haunt us for coming years. We also try to pass some of the costs back to the customer, where we have renewed our new contracts at a higher rate. So as I said, we're taking a lot of measures. We're also trying to increase the utilization levels for our team by cross-skilling them and ensuring that they don't sit idle. So a lot of work is going on in each of those directions to contain the cost. So if you look at quarter-on-quarter numbers in detail, then we will find that we have actually saved on some cost if I remove this one-time incentive from the salary expenses. So we are able to reduce the people cost also quarter-on-quarter.
Okay, that's good. Thank you, Avinash.
Thank you, Varun.
Thank you, Varun.
The follow-up question coming from VP Rajesh. VP, you can unmute your line.
Yeah, hi. Thanks for the opportunity again. So Avinash, a quick question on generative AI. I know you mentioned AI, but I was just curious, what are we doing about generative AI with respect to the clients in the enterprise side as well as the Fortune 500? What kind of opportunities do you see because of that?
So, as I said, we are still at an exploratory stage. Generative AI can actually do multiple things, right from coding for software engineers to, coming out with ideas which can speed up the entire. So we were talking to a couple of companies out there, and they are trying to see if we can create an enterprise repository and enable it with AI, so that anything that you want to search within the company for any purpose can be, just pulled up right there. Things like the contract is due 30 days from now. You have not increased the rates for the last 3 years. You have an opportunity to go and increase the rates. All of these in human intelligence can actually be fed into AI system and can come out of becomes a very strong business case, not only for us but for our customers also. So as I said, we are at a very early stage. We can't call it any expertise whatsoever. We are learning by the day, and we are trying to explore with the help of other AI companies and tools out there to see if we can make an impact for our customers. Customers are also asking how they can enable their AI into their existing software. both Salesforce and ServiceNow is heavily working towards coming out with AI-enabled modules. So we are also, keeping a track of that. If we can learn and create value addition for our customers using those modules. So, very early stage, maybe to comment anything on that.
Understood. And just on the number side, what is our cash at the end of the financial year?
So I think we had that number at the start. We have about 176, if I'm not wrong. Yeah. This includes 64 odd crores of account receivables.
Okay. So 112 of cash and then 64 crores of receivables, correct?
Yeah.
Okay. Thank you. That's all I had.
Yeah. Thank you, VP.
Thank you.
Yeah. And we will take the last question for today.
Pratik, have you looked at the chat? There are multiple questions in the chat. Have you looked at some of those?
Yes.
Have we covered all of those? Okay.
Most of them, like it's on AI and the margins. So,
sure.
Yes. So we'll take the last question from Shashank Rastogi. Yeah. Shashank, you can unmute your line and go ahead. Shashank? I think he can't talk, so his line is dropped. So we will take the last question from Bhagwat Naik. Bhagwat, you can unmute yourself and ask the question.
Hello, sir. I would like to know about the blended tax rate for FY24. So could you please update on that?
So I think it is coming at 21% right now.
Yes. For FY24, I am asking.
We used to have it in single digits, but now it is actually much higher.
Okay.
Okay, thank you, Bhagwat. I think we are about to close to our session now. So I'll thank you for participants for joining this call, and I'll hand over the call for the closing comments to Avinash. Over to you, sir. Thank you, Pratik, and thank you all the investors for posing your trust and confidence in InfoBeans. And as I said, there is a slight dip in terms of the revenue quarter on quarter, but if you look at year on year, your worries should go away. As a company, we focus on a very, very long term. We are already in business for the last 23 years, and we have seen multiple such downturns and tough times. But it doesn't bother us because we have always come stronger in each of these times. And as I said, this is a good opportunity for us to see how we can maximize from here in terms of our focus areas on those 4 things that we continue to focus on: the cloud platforms, the automation practices, and the user experience practices. Plus, how do we? This is a good time for M&A opportunities also. So we see a lot of positivity in this time, and as I said, we are here for a long haul. We continue to aim for growing at a much faster pace, and we work towards that objective. All right. Thank you very much for your time and attention. Thank you once again.
The recording has stopped.